Kumar is a 38-year-old salaried individual looking to make a wise investment for his family's future. He wants his money to be invested for around 10 years because that is when he will need the money. For what? Well, his daughter's education, of course. Kumar knows that the cost of his daughter's education is rising very fast indeed, and in order to be able to fund it, his investments need to be made in a manner that allows him to meet the requirement. Now, your goal may be different from Kumar's, but you will agree that the cost of the goal is not going to get any cheaper and that you need to make some smart investments in order to achieve your goals. Now, coming back to Kumar, he knows that in order to meet the rising cost of his daughter's education, the rate of return of his investments needs to be at least as much as inflation. But will normal investments give him that kind of return? On the other hand, what if he puts his money in an investment offering attractive returns but one that does not offer any guarantees? Does he want to take that kind of risk? His question is a simple one. If I need to get good returns but also want to have some sort of guarantee of safety, where do I invest my money? The eternal dilemma of any wise investor: returns or safety. For Kumar and people like Kumar who are looking at striking the right balance between the two, ICICI Prudential Life Insurance now offers an answer. ICICI Pru Pinnacle Super. ICICI Pru Pinnacle Super is a life insurance policy which has a special fund called the Highest NAV Fund B, which is one amongst 9 different fund options that this plan offers. In this fund, you do not have to worry about market movements because you get a guarantee of getting at the time of maturity at least 110% of the highest NAV registered by this fund in the first 7 years of the plan, regardless of how the markets perform subsequently. Let us assume that Kumar chooses to invest in ICICI Pru Pinnacle Super, and since his financial planner has told him about the highest NAV Fund B, he chooses that fund. When he enters the plan, he finds that the NAV of the fund is 10 rupees. What you see now is an example of how the fund may perform in 10 years till the maturity of the plan. In scenario 1, we find that the highest NAV in the first 7 years is 21 rupees, and at the time of maturity, the NAV is 17 rupees. Kumar's maturity fund value will be calculated by comparing two values: 110% of 21 rupees or 17 rupees, and calculated as per the higher of these two values. So, in this case, his fund value will be calculated as per 110% of 21 rupees, which is approximately 23 rupees. In scenario 2, we find that the highest NAV in the first 7 years is 15 rupees, and at the time of maturity, the NAV is 20 rupees. Again, Kumar's maturity fund value will be calculated by comparing two values: 110% of 15 rupees or 20 rupees, and he will get the higher of these two values. In this case, Kumar will get higher of the two values, which is 20 rupees. In other words, Kumar's concern that his family's future will be subject to market conditions has been addressed. This is because with this fund option of ICICI Pru Pinnacle Super, he knows that he can strike the right balance between returns and safety. And so, Kumar now has an option that can help him get the benefit of market-linked returns along with an element of guarantee. Apart from this, ICICI Pru Pinnacle Super also gives him the security of life cover, which is essential to safeguard your family from unforeseen events. Today, we spoke of Kumar, who is planning for his daughter's education. But for anyone with an investment horizon of 10 years and a future goal, which could be to fund your retirement or build a corpus that you need to launch your own business, ICICI Pru Pinnacle Super is a great long-term plan which gives you the twin benefits of safety and returns, and the most important benefit of life cover for your family.